What's up, everybody? This is Jose. I'm talking about underwriting processes. Now, I know this sounds kind of boring, but I think that if you're watching this video, you're going to find it very educational and super interesting because it sucks to have to go through that process. It can be scary, it can be intimidating, and you can get easily frustrated. When you have time against you, you build up a lot of stress. And whether you're a realtor or a buyer, it doesn't matter who you are. It's stressful for everybody. We're going to get you educated today. If you notice, I did say the word we, and what I mean by we, I mean my man Tony. I'm going to introduce him here in a second, but let's go ahead and give you a full disclosure about who I am. Jose Mejia out of the Tampa Bay, Florida area. I serve in real estate and also in mortgages. I used to do it back in the day and I got it back and I've partnered up with my buddy Tony, and I've learned a lot of things with him and watching these processes with different clients. And we're going to give you guys some cool information today. So what I'm going to do right now is bring my man Tony in. I'm excited to talk about this topic, man. What are your thoughts about your experience when it comes to this whole underwriting stuff and what other, realtors and buyers experience,
Yeah, no, for sure, man. I mean, you said it, right? It can be boring, stressful, and it's a process, right? It's a process that we all have to go through, whether we're buying or refinancing, and having the right lender or the right originator and even the right real estate agent can ease that process, right? Because we're going to cover a bunch of things of how things come in from the consumer to the lender and what the lender does with that. And then when does the actual underwriting take place? So we need to kind of be able to differentiate that, right? Initially, for myself, I could speak, right? When we receive an application, or when anyone receives an application and a pre-approval is completed, right? The pre-approval is really based on the information that the consumer provides. So it's not verified, it's not fully approved yet, right? Someone can put that they make $5,000 a month with $1,000 in overtime, but our job is to figure out how consistent is that $1,000 in overtime, for example, or is that $5,000 fixed salary? Is it hourly? Are we working 40 hours every week? Is it 32? Because those things do make a difference and can make or break a loan. So identifying those things up front, to me, is the most important thing. It's how I sleep at night. I got 5-10 clients looking at homes. I want to make sure that I know their finances from A to Z. So when I get that call from the agent that, hey, the offer is accepted, I know that it's closing in 20 or 30 or whatever days the contract date has.
So is it safe to say, and we're going to get into this here in a second, but you got me like, oh, wild up now. So is it safe to say that nothing's really for sure from the get-go?
100%. It's never a guarantee. Correct.
If you were to explain underwriting to a person that's never experienced this before, what would you say that is?
So underwriting, and there's two types. So we're going to talk about the main one, right? And underwriting is grabbing a third-party company, whether it's through the lender or maybe you have an in-house underwriter. But it's basically packaging all the supporting documents, everything that has to do with the property, everything that has to do with title, and it's all given to a physical underwriter to actually review the income, review the assets, look at the credit report. Underwriting, I would say, is a physical person who's literally, looking at everything and approving or denying. So the underwriter is the person that ultimately will say this loan will close or this loan will not close.
So you said something kind of interesting there, right? I heard you kind of stop it for a second because you said you were going to give us almost a couple of definitions of underwriting, which I want to hear. Take us through two different things. Take us to the different types of underwriting and talk to us in those two circumstances. Like, what does that look like when we're talking about these two different underwriting processes when you don't have a property?
Definitely. And really, really important to cover that. So let's talk about the first underwriting, which is the desktop underwriter or automated underwriting. This does not involve a human being. And normally when I use the DU or desktop underwriter is when I receive a pre-approval application from a client and I'm still basing everything off of the info that they submitted, right? So this is with no documents, no underwriting yet, right? So I enter into the system. This is how much they make money. I do pull their credit, which is actually the most real thing about the pre-approval process is actual credit report. And of course the assets. So when we put all this information into our systems and run desktop underwriting, which is a quick analysis of income, credit, and assets, right? And it'll, within seconds, sometimes a minute, depending on the speed, you'll get the results then and there. This does not require a physical underwriter. It does not involve reviewing documents yet or anything like that. This is just actually like the first line of approval, but it's not even close to being guaranteed. Okay, so that's the desktop underwriter.
What I heard there is that, like, hey, listen, this is the first phase, right?
Yep.
First phase is that we are reviewing everything up front. And one of the things that we could talk about here is that, and it's crazy because I actually just did a video of this not too long ago about the importance of submitting all your documents up front. There's a difference between you talking on the phone with somebody like Tony, giving them your information, pulling your credit report and saying you're pre-qualified. And there's a difference between actually doing that process, but then actually submitting the documents to you so that you could actually verify a lot of that information that they gave you, because it could be a headache if it doesn't match up, right? Have you ever came across that kind of scenario?
Yeah, plenty of times, right? Just yesterday, right? I received a pre-approval application 2 days ago at night, and the income was $7,000 regular income, $3,000 in commission. So immediately I asked for the year-end pay stubs of the previous year because I want to know how much commission she made to add it up to this one and average it out. Sure enough, she sends the pay stub. There's no commission there. Give her a call. And she says, yeah, the commission actually starts this year and I receive it at the end of this year. So ultimately with, any broker that's experienced will tell you commission needs to be received for at least a year prior or 2 years prior, depending on the loan product. So I could have easily just said, hey, you're pre-approved based on this $10,000 in income you put here, and pre-approved her for maybe $700,000, $800,000 versus once I looked at the pay stubs and said, hey, your pre-approval amount is actually $450 to $500, right? So that saved me time, saved the client time, and just the overall better experience for the client. Besides me seeing this on a daily basis, almost, you have no idea of how many calls I get from agents on a weekly basis about a loan that they're the listing agent on, and they have a loan that's closing next week. And hey, can you jump in and see if you can do anything to close this in maybe another extra week or two? So it happens more often than we think. I think the national statistic right now is like out of every 10 loan applications, 5 or 6 make it to the closing table.
That's super crazy, dude. And it kind of makes you think, like, why do people get pre-qualified, or why is that extra step not taken with clients in other circumstances? I mean, I know it's kind of hard to explain why people do things and don't do things, right? But I think that, like, if you put it into perspective for anybody, like if you're the consumer, right? If you're the buyer and you're just like, hey, I got to move from New York to the Tampa, Florida area, or I'm moving from Michigan to Florida, and you're moving your whole family from one place to the next. And yes, you could feel very confident about your credit score. You could feel very confident about the income that you make, right? Everything is going to go great. But if you're moving and creating that stress and making that big decision for you and your family, or maybe it's just one person, wherever it is, the circumstances that when you move, it can be stressful and you want as much peace of mind as possible, right? And so regardless of how confident somebody may feel about their own financial situation, it would probably be encouraged for that person to actually bring in their documents in advance and have everything verified and taken a look at, so that when they do find a house and they are under contract, there's like less minimal risk about you actually getting the house. Is that something that you would agree or disagree with?
No, 100% agree. You touched on a few things, right? Like, why wouldn't just everyone send their documents if this is the safer way to do things, the easier way, the seamless way to do it, right? Everyone's just happy when it's done. And me as a professional, my job is, once I pre-approve a client and I get on the phone with them and go over it with them, as soon as I explain the why behind why I need their paperwork, it's sent to me the same day or the next day. I rarely get anyone not send them. And people do understand that part. Once you tell them, hey, this is why I need your paperwork, is for many reasons, right? It creates a sense of urgency with them. They end up sending the paperwork immediately, and we end up verifying it and making sure that they're in a good spot. But certainly for me, doing this for the past 10 years, I could say that the loans that I already have paperwork upfront for is just making the life of the loan a lot easier for everyone, right? I mean, it could help you in many ways. One, if you're still shopping for a house, for example, if I have all your documents or your loan advisor has your documents, they can make that call to the listing agent. So it has a lot of benefits, but also most importantly, I love using the verified approval process where we have clients moving from one state to another, because the worst thing you could do to a family is have them sell their home at a different state, drive or fly and move all their stuff to the new state, renting, waiting for the next house to close. Or if it's the same day closing, you could imagine how big of a mess it would create for everyone, including our consumers and the buyers.
Yeah, you know what's funny, man? One cool thing that I've experienced in doing and partner up together and doing these mortgages is that with you specifically, and the experience that I've seen is that we get these notifications in my email where I can see when a person's applied. I can see every time they're actually making progress and submitting their documents being verified. And it's such a great experience, whether you're a buyer, whether you're a real estate agent, because you know the work is being done. And even though that I focus more on the real estate side of things, it allows me to actually look at this thing and say, in the back of my head, I'm thinking I might be driving and getting to the next thing. And I might say, oh, this file is getting close to getting pre-approved. And I know that buyer situation, they're in a hurry. So I might have to prepare to show some houses this weekend based on the pace that it's going. So can you talk a little bit about that experience of some of these notifications that a real estate agent gets, and does a buyer actually get those notifications as well so that they can see the progress that's being made?
Yeah, absolutely. So technology nowadays is everything. It's a big part of our process, and we have a tech team that's always working on improving everything and making everything better for everyone, right? And part of it is keeping the realtors and the consumers updated. And this is not just the buyer's agent. When you're getting notifications, we are sending certain notifications to the listing agent in the loan process, of course, once we're under contract, and with limited information, right? Not the same amount of info that you and I see. So like you said, man, you could be driving, and this happens with me a lot, right? I'm always on the go. I'm always hopping from one place to another. And sometimes I'll get a notification like, hey, the appraisal report came back, right? And that's something that I could, a reason for me to reach out to the agent and let them know, hey, the appraisal came back. And most of the times agents are telling me, hey, we already received the notification, but thank you so much, And it's always better to stay over informed, right, than not being in the know, right, or being in the unknown. So the mortgage apps that we're using right now, the push notifications, clients can upload documents through it. They can e-sign. Real estate agents can view the pre-approvals. At one point, we had them where they could start updating the pre-approval amount. If it's approved for 500 and you need a pre-approval for 450, you could go ahead and downgrade it yourself. And you're always going to be in the know every single step of the process. I mean, you could always reach out to your main point of contact, your originator, but you're going to have the information as soon as he has it.
That's pretty cool, man. And you're right, man. The technology just gives everybody peace of mind. Let me ask you a question, because as you were talking, I thought about another thing, is that at what point is it getting to the actual underwriter, the person that's behind the scenes, the person that no one can talk to because they don't want to be stalked and they don't want to be bothered? At what point does it get to them? And what can someone actually really experience at that point, being that they followed your steps of, getting the documents in the beginning, finding the property? What happens at that point, both good or even bad?
Yeah, no, for sure. I love this question because there's different parts of the answer. So I would say 80% is a good percentage. Yeah, 80% of mortgage originators right now, we get the clients to underwriting when they're under contract. The main reason is because when you're under contract, that's a loan that's going to close, that's going to potentially get the lender some profit, and they could pay their employees, including the underwriter, right? So underwriter's underwriting something to get compensated once the deal funds and closes. And here at One Real Mortgage and myself, we get things to the underwriters before you even show them a house. So we have a process right now called the verified approval process. It's free. There's no extra cost for it, but it is a physical underwriting upfront at pre-approval with no address required. So when the client submits their pay stubs, W-2s, tax returns, if they're self-employed, asset statements, whatever we need, and we package it and give it to an underwriter through one of our lender partners, Within 24 to 48 hours, they're going through an initial underwriting. So their income, their assets, and their credit are being reviewed by an underwriter. What I love about this process, though, is that underwriter is the same underwriter that will take over the file once an offer is accepted. So not only it's being underwritten, but it's going to go to someone who's already familiar with the process. And that is so advantageous in many different ways. I had a client that went under contract and the closing date was 21 days out. I get a call the next day from the agent saying it needs to close 8 days from this day because the buyers and sellers are going to be out of the country. This client went through that verified approval process. So, and they were pretty proactive sending the rest of the conditions. And we were able to do it in 8 days from no business days, just straight Monday through Sunday days, right? So it's very, very important. I didn't think we were going to need to close that soon. It was a surprise for me, but luckily I was prepared and the client was prepared as well.
I was going to say real quick, man, that's super, super crucial. And then it's actually something new that I just learned because what you said was it gets verified with an underwriter. Once that's done, go find a house. And then when you find the house and everything's under contract, that file will eventually go back to the same underwriter. And for me, I love that because I put myself in the shoes of that underwriter. And I even put myself in the shoes of a buyer. And I say to myself, this person is already familiar with the good things and the bad things of my file. And this person that saw the bad things in the beginning before the home was under contract, they're very much aware and they're very much accountable for giving me that approval to begin with. Now, they can't control if something changed later on in the process, like you pulled out a furniture loan or a car loan or anything like that. But if you kept everything stable and steady, like that person's going to look at that and say, okay, everything's the same. Tell me about this property. Tell me about this appraisal. Like, it just provides that much more sense of like stability and much more peace of mind. So I love that. I love that you just shared that because that's really cool.
Yeah, no, definitely. And with the verified approval as well, because all the documents have already been reviewed and underwritten, once the offer is accepted, they may have to update a pay stub if it's the pay stubs that we underwrote were a little, couple of weeks old. But what's cool about it is that the next conditions are really like your appraisal, your homeowner's insurance. They don't have to go do a verification of employment anymore. There's a lot of things that get skipped throughout this process as well. And it also saves you a lot of time, right? Like if you're trying to qualify a client with their overtime and commission income and you submit the package to the underwriter is going to communicate with us and say, hey, I see you're trying to use additional variable income to help them qualify. Here's what I need from you now to be able to use that. So that's so crucial of getting that extra document that's required before we get into the underwriting where, time's against you and it's causing all that stress because sometimes clients will send you something on the spot. Some clients are like, I don't know where that is, or my company changed payroll, or the company I worked for shut down. They don't exist anymore. It could be anything that you would never thought that it would affect a loan process. So huge process that everyone that I work with goes through a verified approval process, 100%.
So dude, I'm going to ask you a question like that were verified in the beginning, regardless of whose fault it was. Mm-hmm. Out of those 10 files, how many files actually get denied and how many get approved?
So, and just to make sure I understand the question. So this is after we've told the client, congratulations, we verified your approval, go find the house. And then they found the house and then it didn't close, right?
Yeah.
Yeah. Okay. Just making sure. Yeah. Because it could be different ways, but 70 to 80% would close. And the reason, regardless of whose fault is if a home under appraises or after the inspection, they don't want the house. I would say 100% close if the home appraises and inspects. And if it doesn't, and the clients don't want the house, then they back out. But it's never been because of a qualifying issue. So I've never had an underwriter tell me, hey, this is approved, and then come back and say, hey, by the way, no, we got to look at something else.
Yeah, and let's wrap it up with that, right? I want to kind of talk about, you mentioned about like, hey, listen, 7 to 8 out of 10 times, this file could possibly get approved, and maybe 1 or 2 times it could probably get rejected for these specific reasons. And, the appraisal being one of them, the home inspection being one of them. And I think that that's usually where the realtor comes in, right? And actually looks at those situations before they happen, right? And you communicate communicate that with your buyer to say, hey, listen, I can't guarantee you that this is going to happen, whether it's good or bad, but here's the probability of the home actually not appraising, right? Because we have the resources and the experience to be able to educate a buyer to do that before they actually get into that situation. And also, like, we communicate with the mortgage lender to say, listen, this could roll nicely or it could not based on what I'm seeing. The home inspection, we're not professionals, so we can't really tell you when something's wrong with the house. Our experience in seeing things and seeing reports, we can point out some things, but we won't sound off the alarm. It's just more about like making you aware, right? Aside from those two things, you have other things that actually can deny a mortgage loan. Like maybe you could expand a little bit further on this and just wrap it up with maybe some of the other things that you can think about. But there could be things that the person's passed the appraisal, passed the inspection, and they're getting to closing, and it's been 120 days since they've had their credit pulled. So what happens there, right? If time has passed since the initial credit pull, what does the underwriter do at that point? What good or bad can come out of that?
Yeah, definitely. So the lender will have to pull an updated credit report because the one that they had on file expired. And sometimes, unfortunately, clients will make a large purchase, will co-sign, will miss a payment, close an account. Some people think closing an account helps with credit, and it doesn't. Actually, it lowers your credit. And that's why it's really upon the mortgage originator, right, professional, to at pre-approval and just constantly reminding them that, hey, by the way, please, while you're pre-approved, while you're shopping for houses or while you're under contract, please avoid anything with credit, right? Don't open, close, or co-sign for anyone or purchase anything. Avoid any cash deposits. Avoid changing your job. I go over do's and don'ts with clients because at the end of the day, most clients buy a house in their lifetime, maybe 2 or 3, right? But I'm the mortgage professional that is originating a couple of loans a month. And as long as I tell the client what to do and advise them as much as I can, then if they decide to do anything besides what I'm telling them afterwards, that's really on them. But most clients, for the most part, everyone wants to close on a house, right? No one wants to start a loan process and throw a monkey wrench in the middle of it and not close on the house, right? So credit could definitely be a deciding factor in funding a loan. Other ways where loans wouldn't close would be the information that's provided by the client upfront. So I urge every client, right, to be as honest as they possibly can with their lenders, right? Because, for example, employment needs to continue for a certain amount of time after you fund the loan. So when we're doing a verification of employment, we reach out to the employer and ask them, hey, are they likely to continue working here? And most of the times the answer is yes. But if you have someone that they already know they're terminating their jobs next month, when the lender does a verification of employment, the employer is going to tell the lender, this gentleman or this woman is not going to work here anymore, right?
Right.
So
right.
And that's happened with me before, like this year, right? So it's not like something astronomical that doesn't happen that much. It happens more often than we think. And this was just the case of a client not telling me that, hey, I'm quitting my job and I don't have anything lined up yet, right? So just, as long as there's a good means of communication between the originator, the agent, the real estate agent, and the buyer, and they're, just being upfront, talking about everything upfront. Because at the end of the day, I'm here to help you close a loan, not here to help the loan get denied or waste your time or money.
That's awesome, man. And I love hearing that. And I think that as we wrap it up, it's kind of like, man, like you can do as much as you can up front to give yourself a peace of mind. If you're moving from a different state to another state, take these extra steps. And even if you're not, I think everybody appreciates peace of mind, whether you're a real estate agent or whether you're a buyer. So real quick, Tony, tell us some of the states that you're licensed to originate, so that if somebody that's commenting down below, and I hope you guys have been commenting to ask us all these questions that you may have that we're not covering, tell us what states you're licensed in. And I know there are probably several, but give us maybe some of the key states that you're licensed in where people know that they can reach out to you if needed.
Yeah, absolutely. So I'm licensed in various states: California, Arizona, Texas, Florida, Michigan, North Carolina, Pennsylvania, New Jersey. Those are the ones I can think of right now, but we will put it in the email and the video description. That'll be great.
And Tony, vos hablas español también, ¿verdad?
Sí, hablo español también.
There you go, my friend. So Tony speaks Spanish. I speak Spanish. My friends that are over here in the Tampa Bay area or in any parts of Florida, I don't care if you're at Real or not, come to me because I can help you guys kind of go through some of these motions as well and then get you connected with Tony. So Tony, I appreciate you, brother. I'll see you on the next one.
Thank you for having me. I appreciate you, Jose.
All right, brother. Take it easy.
Take care, man.